Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we bring you the latest news and insights from the world of cryptocurrency. Today, we're going to dive into a fascinating story about Méliuz, a Brazilian fintech firm that's taking a bold step into the world of Bitcoin. Méliuz has just launched a share offering, which is essentially an invitation to investors to buy shares in the company. But what makes this move particularly interesting is that the firm plans to use some of these funds to stack more Bitcoin. That's right, Méliuz wants to accumulate more of this digital currency, and we're going to explore why. Now, let's talk about what it means for a fintech firm like Méliuz to launch a share offering. Essentially, it's a way for the company to raise capital from investors in exchange for shares in the business. This can provide a steady stream of funding for the company, which in turn can help them expand their operations and invest in new projects. In this case, Méliuz is looking to use some of these funds to acquire Bitcoin. And we're not just talking about a small amount, we're talking about significant sums. The firm plans to use around $103 million of the raised capital to buy Bitcoin, which is a substantial investment in the digital currency market. But why is Méliuz taking on this risk? Well, it's worth noting that Bitcoin has been a highly volatile asset class over the years. Its value can fluctuate wildly, and there are no guarantees of returns on investment. So, what makes Méliuz think they'll be successful in their Bitcoin stacking efforts? One possible reason is that Méliuz is taking a long-term view. They're not looking to make quick profits from the sale of Bitcoin. Instead, they're planning to hold on to it for an extended period of time. This could potentially allow them to ride out market fluctuations and benefit from any long-term appreciation in value. Of course, there are also risks involved with this strategy. If the price of Bitcoin falls significantly, Méliuz could end up losing money on their investment. But as we said earlier, they're taking a long-term view, so they may be more resilient to short-term market fluctuations. It's also worth noting that Méliuz is not the first fintech firm to take on this risk. There are several other companies in the industry that have launched similar initiatives to accumulate Bitcoin and other digital currencies. Now, let's take a look at some of the details of Méliuz's share offering. According to reports, the company plans to sell around $103 million worth of shares to investors. This is a significant amount of capital, and it will give Méliuz the resources they need to pursue their Bitcoin stacking strategy. The share price for these offerings has been set at around $2,500 per share, which is a relatively high price point. However, given the potential risks involved with investing in Bitcoin, investors may be willing to pay a premium for the opportunity to participate in this venture. As we conclude our report on Méliuz's share offering and their plans to stack more Bitcoin, it's clear that this is a bold move by the Brazilian fintech firm. While there are risks involved, they're taking a long-term view and may be able to benefit from any long-term appreciation in value. That's all for today's episode of Bitcoin Bulletin. Thanks for watching, and we'll catch you in the next video.